Hello traders, and welcome to Hit the Mark Trading's Daily Russell 2000 TF Contract Review. My name is Martin Rimes. Today's date is Thursday, January 23rd, 2014. Remember, everything I mention in this recording is for your educational purposes only. I'd like to ask you to please check out hitthemarktrading.com, and while you're there, take a look at the context page and you'll have the opportunity to sign up for Rooster Call. This is my early morning note to clients. I look at the charts, I look at the overnight action, and just write a very brief synopsis of what we should look for. I send it to clients, and I'd like to send it to you for free. Okay, let's go to the charts. Well, here's the daily chart of the Russell 2000, and as you can see, price has just been in this marvelous channel, just this marvelous channel. When we hit the top, it's natural to see us want to touch back down. The weekly chart has extremely strong trend and momentum, as does the daily. So, we've been kind of sideways here. Now, the range was very nice for trading. Let's look at the intraday. This is a 10 range bar chart, a 10 range bar chart. If you're unable to use range bars, I would suggest a 512 tick chart, okay? And like you're going to do with any type of chart, you always just want to draw your lines, okay? Now, those of us who know how to trade the commodity channel index, we look for stuff like this, and of course we look for, this is pretty important, the idea that we come down to close to a floor pivot and reject it with a signal here, and then up we go. Alright, it's pretty common to see if we have a big drop down that we're going to retrace. Now looking at tomorrow, here's our main floor pivot. If we go down to S1, very, very distinct possibility. I want you to know this is basically just a retest of the low, right? So it wouldn't surprise me if we come down here. Obviously, we can go higher, all right? So, considering the range of today, we have pretty wide floor pivots. So R1 and S1 are the most likely floor pivots to get hit. Let me just look at the daily one more time with you. Okay, so I would look at this and I would say, well, okay, we could just bang back up to the top again. What we're really looking for in the daily chart is a close below this blue line we've drawn here, 1166. And then we expect to see price come down to this area right here. Okay? Just going to mark it for you. Alright? And this is our moving average. And also we've got this line here, this resistance line. What's that? Make that where we can see it. Okay? So if we break with a close below the blue line, 1166, we should expect we're going to run down to 1144. Okay, now the weekly chart, we still have one more day for the week, but here's what's going on with the weekly. Very, very, very strong trend and momentum. I want you to look at how since December 2012, we've been above the zero line on the commodity channel index. This very, very, very strong trend and momentum. So can we go higher? Absolutely. We know that when we get close to this channel line, we typically stall out, and that's all we're seeing. Price pattern wise, this is considered, these black lines, an ascending wedge. So they tend to break to the bottom. If we break to the bottom, I just want you to know we could go all the way down here to, where I've got this box at the moving average. So that's around 1068. Okay? Alright, that's it. Now I will record another video probably over the weekend for you. Have a good weekend, and if you're interested in option trading and you're not sure if you want to do it or not, I'm holding a very simplified option trading course. Please check out hitthemarktrading.com for more information. That's it. I'll talk to you in your next video. I'm going to talk about the US dollar index in the next video. Bye-bye now.